Hey folks, welcome. Just doing a sound check here. Awesome. We'll get started here in a couple minutes. Let the room fill. One more minute. We'll get going. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, welcome folks. Yet another week has went by, just like that. We're coming into Friday. Yesterday was pretty exciting actually, and if you follow me on Twitter, that's a good thing. I told you I guess it was this morning, maybe it was even last night, I don't know. I was up all kinds of hours yesterday. But 43.53 was extreme support. We traded just below that, bounced big today, as you all know, and we did manage to print into positive range. And if you recall, you could watch every algo trying to be triggered this morning. I don't know what it is about the world that we live in right now, but it certainly feels like there's a conspiracy just about on every level. I know that sounds funny, but if you just looked at the stories that were coming up, I don't know who writes the stories, like CNBC, Market Watch, Yahoo, all of those things. I mean, they were just playing up the whole Fed taper, trying to get that narrative to go. And it was interesting because every story that came out that I saw right before, maybe a half hour before the opening, and just after the opening, they were kept throwing this narrative out there. Meanwhile, futures are just catching a bid right off the open, and actually slightly before that, and we just continue to see that thing rally back, and it came back really strong, to say the least. But in the end, nothing happened, right? We were S&P up plus 0.1, NASDAQ up plus 0.1, and the Russell once again got hammered, down 1.2%. I'm going to go through a fair amount of this information here tonight from the standpoint of what that relationship that's going on, and it continues to deteriorate. One of the questions I asked myself this morning, if the Fed's going to taper, why is the 10-year catching a bid? Why are yields dropping? And they got back to 1.24. I'll talk about more of that also here in a few minutes. But it made no sense, right? And it looked like the bond market seems to be the one that's got this right, at least at the moment, from the standpoint of the taper, because we just saw that really nice bid in the treasuries, and all of a sudden everybody that was shorting the S&Ps and the other indices found themselves covering up just to get out of the way, especially in the NASDAQ. We were up over 1% off the lows on the NASDAQ, on the futures on the NASDAQ. So that was fairly exciting. It was just kind of looking at the something I wanted to talk about. Everything seems to be about this Delta variant, right? That's also the other story the algos are throwing around. And we've been running this cycle for a while. I'm starting to feel like maybe that thing will be in our rear view mirror, but there's still more, I think, traction they're going to get, and there are the media, and these folks are continuing to keep that dialogue out there. And I'm not saying it's not happening. I'm just saying that is the dialogue they're pushing around the markets. It appears to try to get them to come off the highs that we saw just a few days ago, actually. And so we look at some of the sector activity. When I go through the database tonight, I'll also talk about some of the sector action there as well, especially on the short-term level. But we saw consumer staples, real estate, healthcare, and utilities up 0.9, 0.9, 0.5, and 0.4. Those were the strong sectors. Everything else was under pressure, even though we saw this rebound on the indices. And this really is setting the tone. When I go through the technicals here in a few minutes, you'll see where we are right now, and we're back into the sideways limbo range, and I don't see us actually, as I mentioned last night, I didn't see the break yesterday, the late break, that was going to be the end of this market. Now, there's still lots of challenges from getting us in position to start to rally again, but we're still at that point where we're not going to collapse yet. And some of the numbers I talked about last night really came into play. And I as you know, we did about an hour last night. We're going to be a lot shorter here. We're about 4 or 5 minutes in. So I'm going to blow through these markets real quick. We'll call it a week, and then I'll talk to you again on Sunday night. So let's go ahead and get into the database here so we can talk a little bit about that. There's a couple things that I want to cover from that standpoint, just so we have an idea on what's likely to be next here. So as we look at this database, let me get over to the stats here so we can see exactly what's going on. So there was a lot of activity. Again, we had 4,045 sell signals on a short-term basis, 230 buys. I mentioned in last night's video that I thought we were going to go into a full liquidation mode, and that's exactly what we did. We're heading there. We're well below. There's another marker, 22%. So 18% is basically an extreme. But when we see the short-term database go into this type of mode, what this means is we're not going to be able to rally much here. And as you know, watching the channel on a regular basis, as we just weren't able to get any traction really above 45% on a short-term basis. And that really set the tone for this little mini correction that we're seeing right now. I'll go through into detail whether I think this thing can expand a little bit more, but for the most part, what we're looking at here is really going into a sideways range. The database is fully blown out on a short-term basis, and this is likely to continue down. I mentioned last time we go back a couple cycles ago, and we go back a little bit more than a year ago in June. We did see this, June of 2020, we did see it cycle all the way down. I believe it was 6% of the symbols actually were long, and that is quite extreme. I don't think we'll get to that level. There was certainly a lot more volatility last year and a lot more concern out there, but we are seeing this big database move. And what this is setting though, and when you get down to the extreme, that's where we start to actually look for a bottom. So the fact that it doesn't own anything, when we start to see a little bit of traction come back in, I'm going to be able to actually tag this and start to talk about the markets bottoming again. But like I said, I'll save everything for the technicals here in a minute. One of the things I want to point out, and I'll go back to the Zoom screen here, is that the action that we're seeing right now, we look at the sectors right now, there's still 3 sectors long, but that won't be until tomorrow. Basic materials, healthcare, and utilities. And they were the sectors that I mentioned just a few minutes ago that were positive today. But those are the 3, if you look at the bottom here, those are the 3 sell signals that we have for tomorrow. So after tomorrow's opening, we're going to be 100% out of all positions when it comes to the sectors. So right now there's 3 to 12, there will be 0 at 12 as we come into that, where 31% of the groups, the industry groups, are long, and 20.92, or we'll call it 21% long on the individual total symbols. And these symbols that we're talking about here in the database actually includes mutual funds, ETFs, bond funds, all that stuff, and individual stocks. There's probably roughly around 7,000 are individual stocks. The rest is all the filler. And I was talking to someone just the other day, and I was talking about where not a lot of folks are using the mutual funds are in there, but all the metrics that I use in making the analysis database have been like this for years. We've pretty much been stable around this 16,000 symbols for multiple years, maybe for the better part of 8 to 10 years we've been at this level. So this database it gives me a lot of good feel for how things are likely to rotate, and that's why I focus on this every night before we get into the technicals. So let's go ahead and start to dig in. Oh, one mention before I move on. This is coming into Friday. At the end of the close, those of you who are WaveTech or Portfolio Expert users, you know this, but this is the big day of the week. We will get the intermediate models run, and right now let me zoom in and go back to that just so you can see where we are. Right now we are 60. We're 66.91% long in the database. So there's 10,942 symbols. After this week and after seeing this daily database rollover, my expectation is we're going to see a downtick, and there's a couple numbers that we're going to be watching for, and especially the software users out there, whether you're institutional or retail. What we're looking at is really this 62 mark, and if this drops below 62, then that will signal the beginnings of a rotation. And then 48 and 42% are numbers you'll hear me. We'll see how this comes out. I do expect to see this thing roll over just a little bit from that standpoint. I think what we'll likely to see is maybe it moved down to 62, not a big rollover, but we could see something substantial, because they're just in the last 2 days on the short-term database, we've seen 8,153 sell signals. So that's basically a complete dump. And when I talked about the mass liquidation last night, that's what we're seeing. There are not many short-term signals left or short-term trends left. And if you know when I'm talking about the database here, this is actually about how many trends there are in these markets. And our models actually look for trending markets. And when we see this happen, that's why it throws us into sideways. That's usually why we can't get the traction. Now, a couple of days ago, just flashing back before I move out of the database, is we were still hanging around. We've been between 35 and 45%. There's enough there to say, hey, we got a narrowly based rally. I talked about that. Well, that all changed yesterday on the close. In that last hour and a half of selling that came in, it followed through today. Even though the indices bounced back, lots of stocks in the background, and that's what this thing tells you, is that there's a lot of stocks there that are actually, the short-term trends are breaking down. So let's get into the technical side of this and start to look at some of the things that I believe are going to come into play here. And we're going to do our usual setup that I usually go through: S&P, NASDAQ, Russell, the spreads, and then we'll do 10-year crude oil and gold, and we will be out of here. So just so you know, those are the things I'm going to cover tonight. And okay, so let's go ahead and take a look at the S&P, and I am going to go a little in depth. I want to keep this reasonably short, but right now we're seeing down 3 handles right now, 43.98. The number that I talked about last night and I tweeted out was 44. We look at the grid for yesterday, and this is the futures. We printed down to 43.47. We look at S3 was 43.50, and that was a key level there. We printed through the 40-period moving average for a minute and then came back up. But what's happening, you look at the PPMs here, they're fading big time. We're actually negative PPM 1, PPM 2 and 3 are still positive, but they have very little influence on that angle of attack or that slope that I talk about all the time. So we are in a potential place to roll over further, but I don't think that's going to happen. It's going to be because of, I'll show you on the SPX chart. So we'll look at the weekly charts as guidance for the overall patterns, and that will also be the case on the NASDAQ and all the other markets. But so let's go to SPX. Before I do that, let's talk about the market grid projections for today. So we're looking at right now low 92. If the markets stay stable, there's absolutely no news coming out today, so everything's going to be running on basically the market sentiment, and market sentiment is a guess at best. I don't think it's really that positive. I think in general, folks still have somewhat of a positive tone as far as the larger market trend goes. Probably most all of the market participants or a lot of the people, analysts out there, YouTube and otherwise are a little negative, I think, right now, but I don't think that's going to be that important. So let's go to SPX. So S1, maybe R1. We could expand down to S2, and I'll talk about this. Use the cash market. I'm going to talk about the important close for tomorrow on SPX, and you can equate that into the futures. So as we look at the daily chart, just going back to yesterday, it was interesting because the low was 43.67, S3 43.63. I mentioned last night I didn't think we would be able to get up to the 44.11. We were down 20, 30 handles last night when we were doing the live stream, but we did. We actually got above it. We had a high of 18 and a low of 43.67. So we basically did an S3 R1, and we finished above the 43.88 level. We actually finished back above 4,400. And so, but just like we're looking at in the futures, PPM1 negative, PPM2 and 3 are still positive, but we've cut through. Just looking at the formation here, just over here on the right-hand side, we look at these PPMs, they're definitely not in any type of trend mode. And that's why I just mentioned that we're going to have to look at the weekly charts to figure this thing out. So before going to the weekly, we'll talk about the grid for tomorrow. We went out at 05, S1, R1, that's 43.93, 44.17. The good news is, and I talked about this a lot, we had that narrowing market grid. We now have it expanding back out. So this is actually healthy, not really negative at the moment. So look for at least R1, S1, but I think we could see an expansion maybe up to R2. So S1, R1, but it's really a pivot area. So you're going to have to look at if R1 is penetrated, that will set up a move to R2. I don't see us getting outside of the bounds of R2, S2. There's really nothing out there unless there's some kind of news out there that could actually, trigger this out. And about the only thing out there would be something on the Delta variant. I don't see anything else coming. There's no news tomorrow. The Feds, basically all the talking heads have done whatever it is that they're going to do. So let's go to where I believe the trends are lying and where the solid analysis is going to be made. And we are seeing, I mentioned this last night in the weekly charts, we're seeing some fading, but it's interesting. The 10-week moving average is 43.61. We printed 67 last night. That is also the low of the week. Nice bounce off of that number, actually. And we're looking at the high-low for the week on the S&P. We had a 44.80, which was R1 was 44.81 weekly. And we had basically, we did not get to an S2. We actually printed through the grid. 44.11 was the grid, and that brings up another interesting things that we need to discuss as well. As one of the things I think is important for you to understand is inside of these trends, and the market grid is an estimation of what's likely to happen. There's no, I see people on the channel going, oh, he's wrong, it went below S2. These are just numbers to have guidelines to watch for certain events to happen. And I know a lot of folks, we've gotten emails, all kinds of stuff, and comments on the channel that people have used these things very effectively, especially in intraday trading. But the weekly grid is interesting. I mentioned 44.11 is the extreme on this chart right now. And if we close under 44.11, we're going to get an STX buy signal. So what does that mean? That just means that we're going to probably move up toward the R1, R2 next week in the grid, and we usually will stay above the inside of the range of the projected, and I'll cover that on Sunday night. But that number is going to be one to watch. So if we do manage to drift lower, close lower tomorrow, anything under 44.11 is going to be important to pay attention to. And the good news is, just looking at PPMs here, I'll just give you the numbers. I won't zoom in on them at the moment. But we're looking at a plus 0.36, plus 0.48, and plus 0.51. And those are all trend mode on a weekly basis. And not only the trend mode, but the probabilities around these numbers are that it's very high that we will remain above these numbers on a weekly basis. So that number I put on Twitter last night, 43.53 on the futures, 43.61 was the magic number on the futures, and those are the 10-week around the 10-week moving average. In the futures, it had more to do with the market grid numbers, but these were key numbers that we would hold. And the reason why I was confident that we'd hold that is because of this angle of attack. It's still positive. I've talked a ton about this as far as the intermediate trends still driving things. So in spite of everything I just talked to you about on the database, the rollover going to 20%, doing all those things, okay, that is a negative, but it's not going, I don't think it's enough to roll the market over. Now, next couple of days, you might be yelling, oh, he changed his mind, we're going over. We don't have enough information here. And for those, like I said, if you're using our platform, you're going to have, if you're doing a short-term strategy, you're going to be mostly in cash right now. And it's going to take a number, probably, I'm going to go out and say 8 to 12, 14 weeks, 14 days on a short-term basis just to set up some kind of low after this type of deal. And it may drift lower, and we may test some of these support numbers. And we'll see how we trade tomorrow, cover it on Sunday night so you can see all that. So I went through a lot of details here on the S&P. I want to go through one last thing. And I want to bring up the monthly chart on the SPX. And this is interesting. We're mid-month, and we're looking at the market being up at let me just get the right number. I'm on the wrong line. R2 was 44.81, the high 44.80.26. So we printed an R2 on a monthly basis. S1, 43.54. There's that number, 43.60, 43.53 on the futures. There's a cluster of numbers there. This is likely to be what we printed last night was probably the lows, and we only got down to, like I said, we got down to the 43.67 level. That's where we ended. We could expand that down, but look at the next numbers. S2, 43.09, and if we go to the upside and we start talking about R3 for this month, 45.26. So there's definitely, I think, some constraint here. We may see it expand. Could print down to 43.09, but I don't expect to see that happen. But with all the rotation database, there might be a little spike or something like that. Those numbers on a weekly should be the most prevalent as far as the key support goes. Okay, a lot going on there with the S&P, and I usually focus in on this. This is kind of this has actually been the market that's been leading the way. So next, let's go over and talk about the NASDAQ. And the NASDAQ was interesting. I talked about last night. Let me get over to the daily. And I showed you last night we got a sell signal, and I'm pretty good at even reading on the futures, the sell signal. I said that in the last couple sell signals, they've been whipsaws. Well, we got the sell signal, and it ripped around. We had a reversal. We were way down almost to looking at the daily graph here on the NASDAQ. What we got down to was actually just about S3. We had 14,734. The low was 710. It was in between S2 and S3. We get that bounce off of there. We got back above the 40-period moving average, 14,864. We look at the grid. Right now, the high was 14,999. So that put us right above R2 actually on a daily basis. So it was a big range. As we look at today and this overnight trading so far, there's going to be some key numbers. That 40-period moving average, 14,878. We go to the grid, S2, 14,802. So we'll say 878 to 02 is going to be support on the downside. Very little action overnight so far. Looking at the upside, probably R1. We could actually try to get up and test these moving averages above here at 15,022.34. Just looking at R2 is 15,054. So just like I talked about in the S&P, as I talked about in the S&P, we really are looking at almost a sandwich job in between these ranges here. If we close under the 40, that would be basically negative because the PPMs here are all negative. When we look at the PPM 1 and 2 are negative on the NASDAQ, and PPM 3 is still positive. So we're seeing that. So I'll just say this, I'm not doing very good at getting through this very quickly tonight. So we're probably going to end up at probably an hour ago before we get through all this stuff. So hang in there. Appreciate it. So we're going to go to the weekly chart again because, like I said, those are the key levels that I believe we're going to have to watch here. And this is just amazing. I know I've been talking about this. We just tested 14,776 was the 10-period moving average. It's got a rate of, the PPM is at 0.64, 0.66, and 0.56. So this is a very robust trend yet. This is not the point we're going to roll over. We spiked under it. We basically went through the grid on a weekly basis, and we got to the low of 14,710. So we traded, the STX for the week was 14,826. We spiked through that, and we're back into the grid right now. But it suggests at the moment that there's only a 30% probability that we'll close under this 14,776 today. So I suspect we'll stay over those levels. Okay, we'll start to move along pretty quick here. We're going to go to the Russell, as I mentioned, and I'm going to stick with the weekly. Now, the Russell has got another interesting pattern set up here. Russell is well below its grid level, so we could get an STX buy signal here. The weakness that we continue to see, it looked like we were, and we tested these moving averages a couple times. Last week, I talked a lot about 22.56, 54. The high was 50 last week. This week, we got up to 22.22, and now here we are at 21.32, well below that number, and below the 21.78 number. I thought we would try to hold this 40-period moving average while we're breaking through it. And what's really, if you're a small cap investor, this is a bit scary because you've got a substantial downtrend now. The PPM1 on a weekly basis is 0.90. That tells you that number is marked at 22.36. It is dropping about 20 handles per week, so that's going to be 22.10. It's going to be major resistance above this market and building. So it's going to take a while before we get anything that looks like a bottom here. Let's go over and look at the spread chart because that is really revealing. And I've talked about this, that this was a consolidation. Now we're getting another leg down. I think the small caps are going to continue to underperform everything after having this crazy time where everything was working, and now we're literally at a point where we're seeing the opposite happening. And as I talked about before, let me bring this up. You can see this chart here is the S&P versus the NASDAQ, and it's going up. So the S&P has been the strongest market at the moment on a relative basis. And the far chart on the right here is the mid caps. They've done a little better than the small caps, but the Russell is just in big trouble. And it looks like there's going to be another leg down, just looking at the overall pattern that we're almost there, going back into where we were last October. And I remember telling you folks on the channel last year that my expectation was that the small caps were going to rally, and I said it was based on this situation, is that the only way the markets were going to continue to go higher and we were going to get to the levels we are now was participation of the small caps. So the rotation went into small caps. Now we're rotating back out, and the actual next rally will probably be that again. I'm watching that closely to see, especially when we start. A couple things here. I talked to you about the database in great detail, that we're at 21% long. So when we start to see the database turnaround, this is where we're going to look to figure out whether we're getting rotation back into small caps. If that starts to happen, we see this spread and this pair start to move a lot better, setting up a bottom, then we're going to know that that is going to rotate. And ultimately what that will do is actually rotate the market into another rally mode, and we'll see more highs, maybe 4,600, who knows, on the basis of the S&P. So but we don't have that right now, so we need to see two things: how the database bottoms out and how this spread acts. And that's going to give at least some insight into what is likely to expect and where to place some bets when you're looking at structuring your portfolios and those type of things. Okay, so let's go ahead and I'm going to do 10-year crude oil and then gold. Okay, so that we're finally going to get out of here. Maybe that'll be a little bit over 40 minutes or so. So this goes to the opening comments that I had a little bit ago. If the Fed is going to taper, why is there a bid in the bonds? Why are yields dropping in here? And what's really going on? And I mentioned that, you know, I'm an old bond trader, institutional bond trader, going back into the 80s. And what we used to always joke as bond traders, we actually have a better insight what's going on in the markets than anyone else, because bond traders have a different view of the world. Stock traders look at earnings and those type of things. Bond traders look, are these guys going to be able to pay their debt? So if you're looking at, and this is sovereign debt we're looking at, but if you're looking at individual debt and corporate debt and all that, it's a much different view of the company than you get. So we always used to think we were smarter than the other guys. But the bottom line is, there is a perspective that's being built here. It's definitely, no one's worried at the moment about inflation. No one's worried about taper. In fact, what's happening, and this goes, everything I'm trying to tie together what I talked about in the opening comments, is really what's happening here is the delta going to be in the rear view mirror? Otherwise, are cases going to all of a sudden start to drop, something else? Maybe there's another variant, who knows? The world we live in, who knows what's going on from that viewpoint. But the bottom line is, this market is telling us that there's no concerns right now. And in fact, we look at the PPMs on this one, and it is telling a story that's, I've talked a lot about maybe holding 124 right where we traded today, 1.24, and
staying below the 134, 32 level. That's still the scenario. This pattern that we're going to see, I believe, in the next, let's say, 2 to 3 sessions, is going to tell us a lot about what's going to happen overall, I think. And so this is one of my focal points here, is looking at everything that's going on. The PPM1, which is on the 10, this is a weekly chart, is big time, minus 1.61. That tells us there's less than a 10% probability for the 10-year to move above 1.34. And this number is dropping right now at about 2 basis points per week. So that's going to be 1.32. That's going to be your cap. But the realistic part of this, if we can stay in this range, I want to spend a few minutes and just talk about this, because I think this is going to be a lot of what's going to happen in the markets. But if we stay in a sideways range, we stay above 1.13, 1.12 was 8 was the actual low. But if we stay above 1.13 and below the 1.3, 1.32, then we're going to get consolidation, and all of these PPMs are going to start to turn up. When that happens, then we're going to see rates start to tick up again. And I've talked about this, if you've watched the channel for a while, I still think we're going to be printing something above 175. I'm still fairly bearish intermediate long term on the bonds, but I think that's going to happen. And we've got a lot to go through on the channel, just talking about the rotation that's likely to happen here coming into the fall. So I'm excited to see how this thing sets up, and if we can figure out a little bit ahead of time where the rotation is going to be in equities and bonds and what the scenario is going to be. And, so all of this stuff is going to tie together. And, we looked at, claims yesterday. I didn't mention those in the opening comments, but claims were at 348. They were down 29,000. Continuing claims are the lowest they've been since the pandemic. They're down at 2.82. We were down 79K on that. So what we're seeing here is it's an interesting paradigm, or in that, is the employment going to uptick, downtick? Right now it's still positive. We're still seeing that. And I talked a lot about this over the last several months, actually, probably 2 months or more, is that really what I'm looking at is for employment to deteriorate as we come into fall, but it's not going to start till probably September, maybe October. So I'm staying on this theme right now. They haven't told me I'm wrong yet. When they tell me I'm wrong, I'll switch, but at the moment, I still believe that's the case. Okay. So I burned some time there, folks. Thanks for your patience. There's a lot, I think. This is a really critical moment, I think, in the next couple of weeks, not necessarily today, but the action over. We're going to get some messages here very soon. So we're going to go to the weekly crude. I did cover this in detail last night, so this will be fairly brief. I still think this crossover that's about to happen between the 200 week and the 40-week moving average is going to be a significant event. And I believe that will start at least the bottoming pattern in the slight decline that we've seen for a while over the last, maybe 3 weeks, but we can actually roll it back to about 5 or 6 weeks that crude has been under pressure. So the key level that I mentioned last night, 60.67, and then also we have 60.94 right at that, we'll call it $61 level, is going to be really key. And I want to make sure that you folks are focused on that. There's still some downward pressure. The ppm 1 is minus 0.91, ppm 2 and 3 are positive, and that ppm 3 is the 40, tracks that 40-week moving average, and that's up 0.98. That tells you there's only a 20% probability. There's a 20% probability that you are going to be able to get below that value. So that $61 level is going to be really key, but I don't see it like big reversal pattern, but I do see this thing ending up back in a sideways range. So here we go. Final market is going to be gold. Gold's up 340 right now. Let me flip over to a daily chart here. I'll talk a little bit about it. We'll go into more detail. If you go back almost 2 weeks ago, gold's actually a little higher than it was after that sell-off that we had on that Friday, and then that Sunday night that we had the flash crash in gold. That, as I said, even that night when that was happening, I thought that would be the bottom of this pattern. So far, that's the case. We're actually substantially off of that low. That low was actually at 1677. Here we are at 18. Here we are at 1785. So we're about $120 off that low. And I still think the key levels to watch here will be these moving averages here. And there's still some downward pressure, but I want you to notice, let me go full screen so you can see this a little better. This ppm 1 is turned up substantially. It's actually went positive. It's been negative for the past several days. So what's happening is the 10 period moving average is turning up underneath the pattern at 1767. That's going to be your big pivot. We're likely to stay well above that level. And then the next thing that needs to happen is 1795. I've talked about that number a number of times, is your pivot on the upside. And I'll show you on a weekly chart to finish off this is, so we had a high exactly of 1795. That 40 period moving average, 1795.40. That's your pivot number. Right now it's 1795.50. It's actually rising in the pattern. And that's why I'm talking about this ppm down here. If we look, is right now on ppm 3 is slightly positive 0.06. So let's go to the weekly chart. So the weekly chart has a fair amount of action here. The ppm 1 is still negative. This is the key level, 1792, 1795, based on the daily and the 10-week moving average. There's still a lot of pressure down. It's a minus 0.55. So I mentioned this the other day, because we had that reversal last week at the close was 1778. If we can stay above that, that's going to be a bit of a positive, but I really think we're going to stay below the key averages on the weekly, which are going to be 1810, 1816. So even if the market manages to get over that 95, there's another wall. So there's a fair amount of resistance, 1812, 1834. There's a wall actually, or even maybe we'll call it a ceiling above the market here. So there's no runaway market, but the patterns that are starting to set up on the PPMs are really bullish from that standpoint. And it just takes time. We're looking at 1 week at a time. So I'll update this on Sunday night, but I still like this pattern. I still expect to see it over that 95 pivot and ultimately challenge these numbers, 1812 to 1835. Okay, folks, just want to thank everybody. Another week. Thanks for all the support, all the watching the videos. We did a couple pretty long ones. Tonight's another one. But there's just a lot to talk about. And there's nothing worse than getting me on. As you know, I do 2.5 hour live streams sometimes, so I can keep going for a long time. And maybe this makes my life better. I get home and I don't want to talk anymore, so I'm more quiet. Anyway, thank you so much for supporting the channel. If you haven't subscribed, please do. I think there's a lot of things that you're going to want to know as the WaveTech database starts to rotate in. A number of things that are going to be really significant and figuring out as we come in, go through third quarter, but actually as we set up coming into fourth quarter, trying to figure out where this market's going to go and where things are happening. So once again, thanks for watching. We'll talk to you on Sunday night. Have a great weekend, everyone. Just a shout out, I do still see crude going to 90. All right, folks, have a great weekend. We'll see you on Sunday night.